But make no mistake, we are in a bubble and it could end badly at some point. Yahoo executive editor Brian Sozzi said yesterday he believes that investors are now fully engaged in the stock's rise and are acting irrationally. In a normally functioning market, Nvidia's stunning success should be driving down competing stocks. However, that's not the case. On the contrary, shares of ARM, AMD, Intel, and even Meta are surging along with Nvidia. The reckless, as Sozzi called it, unbridled investor confidence is also supported by sway data. Charles Schwab, a financial services company that monitors US stock market sentiment, recorded the highest level of bullish optimism since 2021, compared to 32% in the fourth quarter of 2023. Current surveys show that bullish optimism among retail traders has already risen to 53%. The most important factors influencing the markets this year are the US presidential election, interest rates, inflation, and geopolitical conflicts. The yen's outsider position in the United States dollar basket is another serious growth factor for the Japanese stock market. Foreign investors can profitably buy Japanese stocks on the wave of the global rally because of the yen's exchange rate against the US currency. No wonder the Nikkei index closed today's Asian session at another record high of 39,334 after a long weekend. At the same time, index heavy weights such as Tokyo Electric, Sumitomo, Mitsui, Mitsubishi, Nintendo, and Tokyo Toyota Motor all saw significant gains. Japan will release inflation data tomorrow, and the reports are likely to dampen the market's enthusiasm for the pace of monetary tightening by the Bank of Japan. In terms of enthusiasm, European stock markets are in the red at the start of the week. On a Monday, the major stock indexes dropped as the traders preferred to wait for the key economic data. First of all, reports on inflation in the United States and the Eurozone, as well as China's economic activity index. As a result, after hitting a record high on a Friday, the Stocks index dropped to 496 points. At the same time, representatives of the European Central Bank confirmed that they were paying close attention to inflation levels in the Eurozone, considering the services sector and the wage growth. Moreover, ECB head Christine Lagarde said on a Friday that the growth of wages had slowed down. However, it's too early to talk about a victory over inflation. In addition, Bank of Greece Governor Yanis Stounaras ruled out the possibility of interest rate cuts in March for the Eurozone regulator at all. Following his comments, the euro rose against its major rivals, testing the level of 1.0855 today. The single European currency may resume its winning streak. It has closed 8 out of the last 9 trading sessions with the green figures. It seems that the market has regained some momentum after Friday's stagnation, and the euro-dollar pair was also influenced by the release of new home sales data from the United States. According to reports, the figure rose by 8%. However, from a forex market point of view, this data is insignificant and is released rather late. Nevertheless, at the beginning of the week that ended in February, bulls managed to keep the euro above the critical level of 1.0850. In the event of further gains, the pair may move to 1.0900. At the same time, the euro is unlikely to drop to the support of 1.0800 during the day. The fact is that the narrowing of the gap between United States and the Eurozone interest rates, which traders believe will happen by the end of the year, and has been the main factor in the euro's strengthening. 2 weeks ago, the divergence in the forecast between the Fed and the ECB was as high as 80 and 100 points. A dot plot of the Fed's forecast shows that 11 of the 19 U.S. central bank governors expect a rate cut of at least 75 points in 2024. By Monday, this gap had disappeared as inflation expectations in the Eurozone rose slightly. In addition, optimism sentiment amid stock market gains led to an outflow of some safe haven assets from the United States dollar. Moreover, Bank of America believes that the US dollar is overvalued and that the euro-dollar pair may soar to 1.15 by the end of the year. The bank also noted that the US economy would begin to weaken and inflation would continue to slow down. New interest rate projections will be released along with the results of the Federal Reserve's next meeting on March 20th. So far, officials have been mostly hawkish in their comments. Michelle Bowman, a member of the Board of Governors, said that the time was not right for a rate cut. Minneapolis Fed President Neil Kashkari said the Fed should wait a little longer before the cutting rates. Atlanta Fed President Raphael Bostic suggested that a change in a policy toward a more neutral stance would come in the summer. New York Fed President John Williams said in an interview published Friday that it would probably be appropriate to cut rates later this year. Another Federal Reserve official, Patrick Harker, also supported a wait-and-see stance. According to the FedWatch tool, the markets are now pricing in about a 20% chance that the Fed will start cutting rates in May, down from a nearly 90% a month ago. Against this backdrop, the US dollar index began the US session down at 103.80. At the same time, the S&P 500 index opened Monday's trading in the green near 5,090 and 5,092 points. Most likely after last week's strong rally driven by the AI boom, investors shifted their attention back to the actions of leading central banks and data from upcoming economic reports. The S&P 500 and the Dow Jones indexes hit new record highs last week, and the Nasdaq approached its intraday record high set in November 2021. As the S&P 500 index maintains its bullish momentum, its price may move towards resistance at 5,098 points today. The next technical support is at 5,067. Surprisingly, the US dollar slightly declined dragged crude prices down, although there is an inverse correlation between these assets. That's when the US dollar falls, crude prices rise. However, oil is falling, disregarding the US currency. On a Friday, Brent closed down, losing nearly 2.5%, and this slowed the uptrend and led to change in direction. Further strengthening of short positions requires stabilization of the price below the 80 level. As for the bullish scenario, it's necessary to return to price above 83.5 to continue the uptrend. Growing concerns about the Chinese economy are among the main reasons for the decline. At least the leading Western media are reporting about threats to the world's largest economy, and this time the reason is a change in demographics and the beginning of a population decline in China. The decrease in the number of people and the simultaneous increase in the burden on the economy set the stage for a slowdown, and this will be followed by a drop in the energy demand. Notably, China is the largest energy consumer. On a Friday, despite a holiday in Russia, the ruble showed a sudden and rather sharp weakening as the markets anticipated new sanctions by Western countries. As soon as the details became known, the ruble almost immediately returned to the previous levels. The new package of sanctions did not impress anyone because it brought nothing new. After a big shock, the market will come to its senses and try to consolidate in the range of 92 to 93 rubles per dollar. Nevertheless, the Russian ruble may continue to grow. You have watched a market review by InstaForex analyst for Monday, February 26. Subscribe to InstaForex TV channel and we keep you updated on recent market developments. Don't miss our videos. Your feedback is appreciated. See you online tomorrow.